saw an asset allocation shift in January where investors sold out of bond markets and cash markets and into equity markets. This is the first major shift we've seen like this really since 2008. Also, we have seen within the equity space that investors have favoured developed market equities over emerging market equities. Okay, so overall, we have seen bonds and emerging markets decline during January. This is offset by gains in equity markets and commodities. However, the gains have been a bit smaller than we have seen in the latter months of 2011. We have seen that risks within the economy have started to decline and investors have started to focus on inflation and growth. So within that, there looks like there's going to be a resolution to the sovereign debt crisis in the Eurozone. Policymakers are looking at a response at the moment which is expected to include an increase in the funds available to countries who need funding that they can't receive from the markets, a lower rate for people who access this, so the cost of going into the fund will be lower than what it was for Greece and Ireland, and thirdly they're looking at a bond buying option which would decline the liabilities that countries who have high debts have. We'll get more clarity on this in the end of March. Also, inflation pressures have been growing throughout the world as food and energy prices have been increasing. We've seen inflation grow in emerging markets in the latter quarter of 2010. However, in January, we saw increased inflation pressures in the UK and the Eurozone. Inflation in the Eurozone went above the European Central Bank's target. As a result, this change in sentiment has led people to focus more on growth assets like equities and away from the safe havens such as bond and gold. Yes, the fundamentals have continued to improve for markets through January. Economic data has continued to come in ahead of what people have been expected, and in January we also saw the IMF increase its global growth target for 2011. Separately, earnings season in the US and in Europe has also been better than expected. This improvement in earnings has been coming from revenues, and as a result, forecasts for 2011 have been revised higher.